Good day, fellow investor. Here was a great long comment asking whether value investing is missing on the upside as all stocks just go up. To summarize, Nvidia is already back from the crash. How to make more money, go to margin, because if you just make 10-15% per year, you're a loser in this environment. And how not to miss on the upside by being on value investor. And I constantly get these comments about, Sven, this, that, you're missing here, you're missing there. Let me discuss value investing just to put it into perspective. And perhaps the key is that being conservative would make you stay out and miss who knows what percentages. The key of value investing is prudence. That's value investing 101. Don't take risks because, yes, you miss out on huge things that can change the world. I missed out on Beyond Meat, changing the world. ARK Innovation ETF, changing the world. Marijuana, canopy growth, changing the world. And many other things with a high change the world conviction that constantly come one after the other. The blockchain, data, big data, pharma, everything changes the world, and we as value investors keep missing. Yes, on the Nvidias, but also on the not Nvidias. And this is perhaps a great chart from the emerging market index. So there was a price here to pay, and there was a price here to pay. When something is really cheap, it can be interesting to look for opportunities. But when it is expecting, despite the fact that emerging markets kept growing, the returns have not been great. So it is also about the price you are paying for that trend. I don't know what will be the next trend, but also keep this in mind. This is the stock market S&P 500 without dividends and a real return. You see here for decades or centuries, there was a zero return. $1 was still $1, just dividends and inflation. Then from here, this is 1.5, this is a log scale here, from 1972 to now, we are at, let's say, a 6x return over 50 years in real terms. But if we just adjust for valuation, P ratio of 7 to 30, if we bring it back to 15, which is the historical average, then this 10 becomes here a 5. From here, 1.5 to 5, that's just a 3x return, and this is the best bull market in history. We can discuss proper measures of inflation, but the key with value investing is that dividends, inflation lead to returns, and if you can here and there find a great business that delivers compounds value, even better. And that is what I do. I try to look for P ratios of 10, growth between 6, 7% and 15%, and for now I can still find those businesses globally. So I am okay with my returns. Perhaps I will miss the 200% hottest thing, but with all these comments, everyone that invested in Nvidia is very fast in bragging about their great investment. But those that missed with all the other promises, you don't hear them about. So be careful with all this media attention to winners, because the losers are often forgotten. And the key with value investing is I want to get to my returns for sure, not gamble on some valuation or some new trend. Yes, great, just keep make money, just keep focusing on those returns, and we'll keep missing on those trends because we will not be infatuated by the market, by the big wins. We focus on the big risks, and we'll just keep on compounding like value investing does, like I've been doing for 22 years, and many of those lost their money in the real estate bubble, in the dot-com bubble, in all those kinds of bubbles, and we focus on fundamentals. That's value investing, that's what we do, and I'll be around in the next 20 years. Unfortunately, many of these chasing bubbles, one after the other, will not. That's the reality. And now the key question is, do I keep fighting these constant comments and telling them how the key of investing is dividends, inflation, and maybe business quality? Because constantly on YouTube. Every day I get messages, Sven, you would have missed on so much by not investing in the S&P 500. Fundamental value or intrinsic value doesn't matter. It's only based on what people are wanting to pay for the stock, what will they expect, and that is completely correct. In the short term, it all just depends on what people are thinking, where it goes next, and that is perhaps best explained with the Bitcoin that goes down 11-12% in a few days, then it goes up again those levels, and it's just crazy. And I understand that the majority of participants is so wired that they only see stock prices going up and down, and that if something is undervalued, it will simply continue to be like that because nobody cares about it. So it's a game based on dreams, not reality, but I stick to reality because even Warren Buffett once said, this was just a comment just below this one, you can expect to get from the stock market long term is dividends, all the rest is simply inflation, higher than reported, to catch up. So investing for me is dividends, inflation, and if we can find business quality that allows for compounding. But constantly, wherever we look at those businesses long term, every day hear from Philip comments, ADM is down 3% since I started covering, Palantir 22%, the market picks the winner in a few months. And here is a great comment. This is not a trading channel. I advise prudence for the upcoming years. And I tell Philip here, go have fun with the markets. We'll keep doing what we do. We'll keep investing. We'll keep compounding. We'll keep inflation. And whenever the next comment comes, like the market is up, you are down, or whatever, I'll just give them these videos. And then long term, I know who will be the winner, but that's a different story. Maybe I'll wait 10 years, maybe 5, maybe more, who knows? I'll just keep on dividending my way